The Bulls versus the Bears. Get in the game. www.tackletrading.com.
Hello everybody, this is Coach D with TackleTrading.com, here to give you a market update and recap for the 20th going into Wednesday this week. Market's been pretty quiet this week, and that has a lot to do with the location it's trading at here. And let me just grab my little drawing tool and just kind of walk you through. We're in that zone where I think the market's a little hesitant because it's kind of that kiss goodbye zip code. Now, we've all learned the kiss goodbye as it being a potential area of reversal. And that certainly could be the case. The market seasonally from mid-October gets that fourth quarter rally, but again, market might be a little spooked this year, might be tentative. So don't necessarily need to try to predict the future. But just be aware that we're banging up into that big zone. I'd call it the 2050-ish neighborhood, 2025, 2050. We can see it slowing down. Now, I've got my chart candles changed up to Heikin-Ashi style candles. Now, Heikin-Ashi candlesticks don't change directions until you see a very clear shift in direction of pivot trend. So if you change the colors of the Heikin-Ashi candles, you'll see red and green candles, when you switch to regular candles. But in here, you'll notice it's still showing very, very strong, green candlesticks through this area right in here. And you'll notice that they'll stay green when they're running up, and then they'll shift red when they go down. I like Heikin-Ashi just because it takes some of the noise out of trading. It kind of helps us keep our head on about us when we get stocks. That can be very whipsaw-y, but it's a nice little function if you want to change your style of Heikin-Ashi candlesticks. It just kind of keeps it into a very strong trend direction, keeps your candlesticks a solid color until you see a real strong shift in a pivot. So that being said, what I see here, let me go ahead and stop the little drawing tool and just zoom in on our chart. And I'm just looking at the S&P futures. I see strong run, dip, little run into that zone. And I haven't put out a stock report in the last week. This week I haven't put one out, just because I really haven't had any new really strong opinions on the market as of yet. And I don't want you guys out necessarily just chasing after random trades. The ones I already put out 2 weeks ago were actually, I'm still watching those same stocks, and some of them have done really well. Visa's rocking and rolling, and some of the others looking okay. When I find some really good conviction on the direction of the market, I'll be looking good. But for the last 2 weeks, I've just been kind of sitting in here and have not really just found anything I'm absolutely loving as far as direction goes. So I have been cautiously bullish on the market, but as we approach this little area of that kiss goodbye, I've become very tentative. And that means that I think it could consolidate, maybe bounce around here a little bit. So just as we keep an eye on this, watch this zone, and I think if we get a check down around the 2000 zone, support resistance zone, watch for cups and handle type things to form. It could power right on through, and just kind of keep an eye on that. Now, this would be a time of year where we could let's take a real quick look at the VIX, the volatility index. We're right in the middle of earnings season, and so you got to watch out what's going on with earnings. So let me go pop in the VIX, VIX. And VIX is down at 15.5, and that would tell me that options are kind of settling down as far as overall volatility goes. But because we are in the middle of earnings season, a good place to go track earnings and stuff would be like on FinViz. If we go look at like finviz.com, you can go to their screener. And on their little screener here, you can very quickly and easily find earnings as one of the things we're looking for. We can go check out earnings date and go see who's reporting earnings this week. over the next 5 days, whatnot. So we can go, who's reporting earnings this week? Now let's narrow it down to the big stuff, optionable and shortable. Let's get everything over $20, maybe even over $10, whatever your comfort zone is. Split the difference to 15. And then let's go with some heavy average volume. Get over 1 million. Look for the big boys. And there's a lot of companies reporting this week. We got some Boeing, we got some American Express, Ameriprise Financial, so on and so forth. You've got a pretty good size list down here. You can export that out to Excel. But you got a lot of companies reporting. So that's one of the reasons I always kind of calm my trading down a little bit, depending. I don't do a ton of directional trading around earnings. Just because it's time of the year where I find some of the stuff a little hard to anticipate. So just strategy wise, I have some volatility strategies that I trade. I'll do short strangles. I'll be looking to exit trades that I put on for volatility and time study. I watch out. When I'm trading a stock, I will put the earnings date in my calendar so that it reminds me, so I don't forget it, just in case. Because my style of trading these days is I'm not like Gino, where I'm sitting in front of the market every day, all day, and doing awesome things. When I travel out to go out and put on the events and do the speaking and that type of stuff, I have to trade strategies that are a little bit more hands off. So my core strategies are really those credit spreads, iron condor type stuff. I've taken to doing a lot of naked puts, and one of my favorites all along is naked puts into a dynamic covered call writing strategy. So the things I am really liking are the things I do have on my last stock report. I'm liking USO right now. I'm liking ETFs. I always tend to go to my ETFs around earnings just because of those same things. Overall, when we, looking across the market, I think that just cautious, tentative. I'm still expecting the market to put in a run through November, but I'm just being tentative on it just because of where it's sitting in that kiss goodbye zone. So keep an eye on that. USO, I'm kind of liking USO and precious metals right now, and I'm liking it for a couple reasons. One, 20-year lows. 2, naked puts or credit spreads. 3, it's cheap. You own it. You can write covered calls. So, just from a market perspective, seasonally, we tend to see oil consumption increase. However, it's not the strongest this time of year overall, but I do like it in general. And, this would be a real simple trade for you to put on. That's not overly aggressive, and you can go look and say, okay, a USO, it's got a bottom at 1450-ish, 1425, 1450. You can go down to 1350. It's been dipping, but I can go in and sell naked puts because I don't mind owning it. Now, if you're going to use your margin and go do it naked, be careful on position sizing. Because if you end up owning it, you need to have the cash to own it. Now, if you approach this as a cash covered put rather than naked, and just sell what you want to buy. So in this case, I'll say, I don't mind buying it at 14, or I don't mind buying it at 13.50. You can go ahead and do full cash covered. So I'll go at 14 with the intent of doing cash covered and only sell what you can afford to buy. Now, if I can only afford to buy 100 shares, then only do one contract. But if you can afford to buy 1,000 shares, you don't have to be afraid to pick that up. Now, 1,000 shares at 14, that means you got to have the $14,000, half of that on margin. So even though it's when I say cash covered, I mean you have to have at least the full-blown margin requirement to do so. And it'll start you out with just a small amount of margin, 22, but it can get up to 7,000 if you end up having to pick it up at 14. So just keep that in mind. Now you're going to get your little profit, $370, and if you do end up owning it, great. You can now own it and write covered calls on it. Do protective puts. There's a lot of little things you can do with that. So I do like the idea of the naked put if you want to be less aggressive. Drop it down a strike price to the 13.50. These are the kinds of things that will help you guys trade through a volatile earnings season. And by basing your trades off of a commodity like USO or SLV or GLD, and avoiding some of the more speculative picks, you can consistently cash flow regardless. of market conditions. And that's what I would urge us all to do. So this is Coach D with TackleTrading.com. Just giving you a trading idea, just an overall outlook on the market. Keep an eye on that kiss goodbye neighborhood for the market, because here's what I'll leave you with one last little takeaway here. If we go look at, let me just drop to the SPY and look at where it's sitting in context. Boy, I got a lot of fun drawings on there for some random reason. Let me go erase all those. And let's see here, remove all those drawings. And just kind of talk about it from this perspective in here. If we look at this from the textbook Elliott wave type perspective, where a kiss goodbye comes, idea here is, and I'm drawing this independent of the chart, Elliott waves will break out, run big, slow down, come down, break, retrace, and that could be, that first breakdown is your first wave. The kiss goodbye is a second wave that could lead to a third wave. Or if we look at it from this perspective, it could end up just being an ABC. So it kind of looks like I could look at this two ways. The market, if it goes into a deep correction, this is 1, this is 2, it drops into 3. 1, 2, 3. Or we get a little something like this. This is dropping down, boom, drop, rip. So it goes into just an A, B, C, and then it continues to the upward direction. Because I don't necessarily know which way the market's going to go, and I don't believe anybody really does. You might want to look back at the bigger picture economics. We always have to watch out for the Feds, the FOMC, the monetary policy, because I think those are ultimately the things that are moving the market. If we look at this quarter and how the earnings are coming out, the market will probably take some cues from how the bigger fish are reporting earnings and the number of companies that beat earnings, et cetera, how much they beat them by, what their forecasts are, whether they're raising guidance or lowering guidance. And the key is to be nimble and don't rely on prediction as much as you do appropriate position sizing and proper risk management and reaction. You can react quickly and keep your risks small, and always plan your trade, trade the plan. Plan your trade, trade the plan. This is Coach D with TackleTrading.com. Hope to see you guys actively participating in the clubhouse. And if you have any requests on topics you'd like to cover, let us know.
Get off the sidelines and take control of your financial future at www.tackletrading.com. Get in the game.